Hey guys, this is Eric Bramlett with Bramlett Residential. Hope everyone is having an amazing week. I hope you guys all enjoyed South by Southwest or got out of town for South by, whatever you prefer. Weather's still amazing right now, and April looks like we have some awesome events. MotoGP is coming up next, I believe, and then don't forget Eeyore's birthday at Peace Park. So a little bit different events between those two. Both of them should be a lot of fun. Today, we're going to discuss the March 2023 Austin real estate market statistics. And March 2023 wasn't much of a surprise at all. You will hear some doom and gloom coming from some folks. That has to do with the year-over-year pricing declines. So we saw average price drop by minus 12%. Other pricing metrics saw a drop year over year from minus 13% to minus 15%. We'll talk about here in a minute why we're not super concerned with that. The main reason we're not very concerned about it is that year over year pricing compares March 2023 with March 2022, which was one of the hottest sellers markets that we've ever seen. So whenever you're making that comparison, we know that the market has shifted, and so it shouldn't be a surprise that there is a price decline there. Some of the numbers that we are looking at, months of inventory, we're at 4.07 months of inventory. That puts us in a balanced market. The sub-markets are pretty different, though, and so it can feel different depending on where you are in Austin and what price point you are. Big shift in seller expectations and buyer expectations is that the average days on market are now 69 days to sell. So if you need to sell a property, just go into it expecting that it's going to take you 2 to 3 months to sell if you get pricing right. If you don't get the pricing right, it could take a little bit longer than that. And buyers should look at this. And if you see a property that's been on the market for a couple of months, it doesn't mean there's anything wrong with that property. It's just the market has shifted, and that's now what we expect. One of the leading indicators that we look at is year-over-year contracts. How many people are putting properties under contract this month versus last year? That's a fantastic measurement of demand. And whenever the market was in decline, we saw it declining pretty considerably. So last October, November, we were in the minus 40% year-over-year contract decline range. And it was incredibly slow last fall and winter. And then things have steadily improved since then. March 2023 looked really, really good. It was minus 6.6%. We look at that on a line chart. It tells the story really well. You can see that from April of last year, just decline, October, November, and then we've seen an improvement since then. So there are buyers in the market. Important to understand that. And the market is recovering pretty nicely in some of these submarkets. The first thing we wanted to see is market stabilization, and we've now seen 4 months of stabilization across the important metrics that we look at. And those metrics are months of inventory, average sold price, and mortgage rate. So the first thing we wanted to see was mortgage rate stabilize, and it's now been in the 6.5% range since last December. Last we checked in last Friday, that was April 7th, mortgage rates were at 6.3%. So we hope to see them in that 6.5 range, and we'd love to see them come down a little bit, but right now they've been stable for 4 months, and we want to at least see them continue to stabilize. So inventory has been stable at around 4 months for quite some time. So we've been stable for at least 6 months at around 4 months of inventory, and no change here. I think we ticked up from 4.04 months of inventory last month to 4.07 now. Going back to pricing, you hear people saying the sky is falling. Well, yeah, we did see a pretty significant price correction from the peak last May to today, and that's in the, call it 15% range. But we've seen prices month over month remain relatively stable since last December. They've been almost exactly stable for the months of December, January, and March. We saw it dip down in February by about 5%, but then it bounced back up 5.5% from February to March. So that's really good news for sellers and for buyers too. You look at it and you say, hey, we are not watching prices go down anymore. We're probably at the valley right now, and historically Austin's appreciated about 6% a year, and we expect that will continue moving forward. New metric we started looking at this month is the number of job postings on Indeed. Big component of Austin's real estate market is job growth. We've always had one of the, if not the strongest job markets in the country. Employment has pulled way back nationwide, and that we're no exception to that. But we do want to see that also stabilize and then begin to improve at some point. So if you look at last April, just under 180,000 job postings on Indeed. We're now in the, call it 120,000 job postings. This is for the Austin Metro, by the way, on Indeed, but that's been stable since, call it December. I guess you could go back to November and say it's been stable since November. We would love to see that tick up. We'd love to see, the hiring come back to Austin. Whenever that happens, we're going to say, oh, great, we're back. We're back on a rocket ship like we've been for so many years. So all this said, real estate is hyper-local and hyper-situational. So the sub-markets in Austin do perform differently, and they are performing differently. In the entry-level price range, median price range, up to average price range, the market's pretty strong. So we're seeing multiple offers in the market. We're seeing lots of buyer demand in the market. Then if you go up, it's pretty much like kind of a straight line decline in demand. So the higher you go in price point, the softer the demand is. And the reason for that is that the luxury markets and, leading up to the luxury market, those buyers are also affected by the stock market. They have typically significant investments in the stock market, and they don't want to sell when it's down. You can't recover that. So we're going to need to see the stock market recover before you will see the higher price points come back. Another submarket that's been, behaving differently is in the suburbs, anywhere that builders are active. They were starting as many homes as they possibly could up to May of 2022 last year. That's when they stopped starting homes. So it takes them around, call it 9 to 12 months to deliver. They're going to continue delivering new homes until, call it May. Then they have to sell all those. So right now there's a glut of new build inventory. It means some really phenomenal opportunities for buyers. But if you're a seller in that market, it's tough. If you have to sell this year, you have to actually get under where those builders are pricing their homes, and that's because people will generally prefer a brand new home to one that's even been lived in for a couple of years. Your situation is unique, obviously. Everyone's is. So if you have a situation whereby you're considering buying or selling, you'd like to discuss it, please reach out to us. We'd love to workshop it with you. We would love to help you hypothesize what would happen this year, what would happen next year, help you weigh your priorities and your options. And we'd love to do that for you guys. So please reach out. You can Google Eric Bramlett. You can Google Bramlett Residential. You can go to our website, or you can email me at eric@bramlett.me. And we would absolutely love to help you just kind of chat about your situation and what is in your best interest. Thank you so much. I hope you have an awesome week. Get outside. Go to Eeyores if you've never been to Eeyores. Go to MotoGP. It's supposed to be really cool. I've never been to that. And yeah, hope you have an awesome day and an awesome week. Thanks so much.